Alrighty, well, good morning, everybody. John here with Crypto Top 10, coming at you with some more trending articles in the crypto news space. Right off the top, happy belated Thanksgiving to everyone in the United States who was celebrating. I hope you stayed safe. Wife and I and the son had a pretty subdued Thanksgiving with ham because neither of us really cares for turkey. But that is neither here nor there. It was nice, though. Nice and quiet, peaceful. And then he woke up and started crying at the table, so, you know, the typical stuff with a newborn. But, all that being said, I do want to say thank you to everyone who has subscribed. If not, it's that little red, blue, pink, or green button, depending on what platform you're finding this on, that you can just hit to get updates from me whenever I drop some content. And, yeah. Thanks for that. Do appreciate all those who have. And then, yeah, let's get into things. I'm still waking up a little bit, so if you hear any clinking, that's just the coffee. But, yeah, so crypto market had a bit of a downturn over Thanksgiving. They're already calling it the Thanksgiving crash. I mean, Black Thursday, Black Friday, it's just kind of a, well, Thanksgiving bloodbath sounds better to me, but whatever. However, Bloomberg is still pretty happy with the asset overall, and even though they've been a bit of a critic in the of Bitcoin in the past, it seems that things are starting to win over them. So in an article published today, the publication, known for its pessimism, highlighted a range of Bitcoin metrics that point to a pretty bullish future. Included in the evidence were record-high Bitcoin futures with open interest, non-zero wallet numbers being at an all-time high, hash rates, and the lack of correlation between Bitcoin and other macro assets. Just look at the market technicals and Wall Street's growing embrace of the world's biggest digital currency. Bloomberg referenced what it described as crypto diehards, or people that are heavily involved in the crypto space that they quoted, who are rejecting the idea that the current price gains are just another bubble. I am not. Well, I guess I am a crypto diehard. I'm not included in this group of them, obviously, but I do agree this is different than 2016. The networks are stronger. The exchanges are better. The use cases are higher. The public knowledge is better, and the institutional players are here to stay. Separate from this, an interview with Bloomberg TV on Friday, meanwhile, saw Antony Trechev, CEO of Nexo, forecasting Bitcoin is hitting an new all-time high by the end of this year, stating the digital gold narrative is stronger than ever. If Bitcoin can capture just 10% of the total market cap of gold, we will be at 50K in no time. I agree with him. Digital gold is a very strong selling point. I mean, when you talk about buying gold, you're talking about buying gold by the ounce. Imagine if you could buy gold by the bar, or a half bar, a quarter bar. I mean, a full Bitcoin is out of reach for the average American at this point, even at these vastly subdued price levels, clocking in at $16,760 right now. Thereabouts, you can, the average person might be able to come up with $8,000 for half, or $4,000 for a quarter. Just wait until the day when you're talking about buying things 1,000 satoshis at a time. That is when we've made it. But part of the crypto's positive image stems from its now 8-month growth spurt since its March crash, during which it has consistently outperformed the other macro assets. Even after dipping all the way back down to where it is, Bitcoin's year-to-date return still stands at 135% against 19% for gold and 12% for the S&P 500, though I will say 12% for the S&P 500 is still pretty darn good for the stock market. I wouldn't mind a 12% return, and I certainly do not mind the 135% return that I've got on any assets I bought back at the beginning of the year. Not much. So, is Bitcoin gonna replace gold? I mean, future and fund flows are saying yes. the future open interest is rising, and investor inflows in Bitcoin versus the same declining for gold indicate that the cryptocurrency is kind of gaining an edge because of its price appreciation. I think it's going to become like 6 of one, half dozen of the other. As people pull out of gold and put into Bitcoin, gold will go down, yes, but that just creates an opportunity for it to go back up in the future. I could definitely see gold rebounding next year as Bitcoin cools off a little bit, as well as I do expect Bitcoin to be back on top in terms of price gaining here soon. I do agree that we will probably see a new all-time high before the end of the year. Everyone spent all their money and went, oh crap, I gotta cash out these gains to buy the latest Black Friday stuff. So once everyone's got their cool new tech gadgets and they've got another paycheck, we'll be right back where we were. Mark my words. All right, hopping on over. Yearn Finance, despite the overall bloodbath in the crypto market, seems to be doing well. It actually climbed 16%. There's a pretty interesting reason for it. So, Yearn Finance just announced its merger with Pickle Finance. That's right, merger, not partnership, merger. It's marking a one-of-a-kind link between the two DeFi finance projects. For those of you who don't know, Pickle is a yield farming project that strives to maintain stablecoins pegs, i.e. keeping them at that dollar mark. 2 days after this merger, Yearn then announced a similar partnership with Cream, a decentralized lending protocol running atop Ethereum. A day later on Friday, rumors are starting to circulate that Andre Cronje, the Yearn Finance founder, is also looking at to merge or possibly acquire SushiSwap. Yeah, so it's kind of looking like, I don't know, Yearn's becoming a pretty big powerhouse in the space. Cronje's certainly making good moves. There were a couple skeptics out there who criticized Cronje for unilaterally signing these new partnerships without calling for a governance vote amongst Wi-Fi holders, which I do think that's actually legitimate criticism. This is a DeFi project. You should probably be vetting these things through your users. However, the vast, and I mean vast majority of Yearn Finance's community is going to ignore the criticism because this is going to drastically grow the Wi-Fi ecosystem, and a 16% increase in price ain't nothing to scoff at. Some of the more happy ones are calling Yearn Finance the first emerging, quote, conglomerate of DeFi. That also explained why Wi-Fi made a comeback recovery in a week that saw the majority of cryptos just get slaughtered. Yeah, I'm incredibly bullish on Wi-Fi, especially making these moves. I do acknowledge that, yeah, Cronje probably shouldn't just be unilaterally signing these partnerships, but if the DeFi community would like to elect, you know, like a small panel of people who could make these types of decisions quickly and give them, you know, very limited power, that probably wouldn't be a bad idea. It wouldn't compromise the market while adding legitimacy to what he's doing. But as long as he does what is good for Yearn, people really aren't going to complain. So, yeah. Alright, let's hop on over. Libra, for those of you who don't know, a stablecoin Facebook was trying to put out, is ready for launch early next year. Per a report from Financial Times, conceived back in 2018, Libra was initially supposed to be an internationally used and accepted coin backed by various fiats and $27 billion conglomerates. However, regulators soon crashed that party for a pretty good reason and took action to cease the development of Libra, citing it as an attack on monetary stability and a medium for terrorist financing. Yeah, they literally wanted to make it, if you had a Facebook account, you could, with any currency, buy Libra. In effect, Facebook trying to circumvent the monetary system and, quite frankly, creating almost a one-world currency overnight. After this, Libra's corporate partners like PayPal, MasterCard, and Stripe all kind of dipped out of there. You know, cue SpongeBob meme. But now, the project back into the limelight with a less ambitious version. This will be back to one-on-one basis with the US dollar. Pretty much just like USDC, just any stable coin. Additional fiat pegs will be rolled out at a later date after thorough legal and regulatory compliances. So All right, we won't do it all at once, but we'll kind of just step by step. We'll ease you into it. Meanwhile, a report added that some Libra members, such as Spotify and Uber, may onboard the currency as a payment method to their platforms as well, but they're going to wait to see how things would go. Again, yeah, it's getting to that one world currency level, and I don't want any centralized entity, specifically Facebook, having that level of control. That's some cyberpunk level of stuff, in my opinion. All right, hopping on over. For those of you who may or may not be aware, on November the 25th, so not too long ago, Coinbase experienced elevated error rates. Basically, they crashed. That is not something that is uncommon, and it probably didn't serve to help what became the Thanksgiving crash or the Thanksgiving bloodbath, but they found their scapegoat. Well, probably legitimately. Basically, a lot of their back-end systems use AWS or Amazon Web Services, and there was a service outage, and that's what caused it. These AWS issues also had a significant impact on the tech sector in general. Adobe Spark, Flickr, and a lot of online newspapers were all affected within the last day. Headlines have run with claims that the outage took out a portion of the internet and hobbled businesses. I mean, yes, but the exact portion I feel like is like 1%. So, I mean, oh well. But no, it definitely did affect things down kind of more on the micro level with all of us. So this latest outage is not something entirely new. It's happened before. Coinbase has had 9 separate issues that led to different types of outages. And there's, quite frankly, a lot of widespread discontent. CEO of Coinbase, Brian Armstrong, took to Twitter to state, "We're working hard to add additional capacity, both in servers and customer support, to deal with increased traffic. Thank you for your patience during this time, and thank you to the team at Coinbase working hard to serve our customers. Bull runs can be exciting and stressful." I do agree with him on part of those things, but you really... I can't criticize it. He's not doing anything different than any other business does. You run with the bare bones that you need, hiring on additional and laying off extra as you go. That's how it works. You might like it, you might not. You might think they should have enough people on hand to meet whatever demands may show up. But if that demand doesn't show up, you now have 15, 20, 30, 40, 100 people sitting around collecting a paycheck doing nothing, and no business wants that. Though I wouldn't mind if there's a business out there that wants that and is hiring. I am available. Hopping on over, we haven't talked about this in a while, but a little report on China's BCN or BSN, Blockchain Service Network. It's introducing support for another new batch of major blockchain protocols. On November the 26th, it announced it's going to be integrating Polkadot, Oasis, and BitYuan into its ecosystem on the 30th of November. Polkadot is designed to connect multiple separate blockchains into one unified network, and it also enables the processing of numerous transactions on several chains in parallel, or parachains as they call them, which brings another level to network capacity. Oasis specializes in private and scalable DeFi tools, and BitYuan is a blockchain solutions provider for Chinese companies. So the Blockchain Service Network is a public network. Piloted in 2019, the BSN rolled out its first set of blockchains, including Ethereum and EOS, in August of 2020, with other networks like Algorand coming as part of a second batch. Basically, you are able... as any global developer, to access a certain network through BSN's global public city nodes and portals in order to deploy and manage their own permissioned chains on the BSN International. Developers have to create an account on the official website. Oh, there goes my kid kicking around on the video monitor. What fun. But the BSN is quite interesting. I dislike the fact that China's running it, because I don't like China. They do love their control, and I don't care for it. But This network is public, it subsidizes it through the government, and it allows them to foster crypto and blockchain innovation while maintaining some control. It's a pretty nifty tool, even if I disagree with the way it's being implemented. And then to round things off today, in an episode of the Pomp podcast, Ripple CEO Brad Garlinghouse talked with the Pomp himself, Anthony Pompliano. Amongst the things they talked about, he mentioned about, in the United States, there's quite an interesting regulatory environment. Ripple's possibly migrating out of the U.S., and a key issue for the company, which is the United States classifying it as a security. In that regard, Garlinghouse highlighted the frustration that exists towards U.S. regulatory authorities over their stance on cryptos, citing a Justice Department report that attempted to unify the views of regulatory authorities. Garlinghouse said that at least 7 different positions were cited, therefore demonstrating the lack of unity in their criteria. Ripple has about 150 potential customers in the United States, according to Garlinghouse, who need this regulatory clarity before they can begin to use the company's products. So basically, Ripple is being stagnated by the U.S. government. Who would have thought? So he does believe that China is the biggest winner because the Chinese Communist Party controls these technologies. I agree with him with that entire statement, though I would add in the flavor text that I don't like it. When added, if there's a possibility that China will make a 51% attack on the Bitcoin network, he responded with, of course. Of course there's a possibility, but at that point, what in the world are you doing? You would just be destroying something that I'm assuming they have invested pretty heavily in. Garlinghouse was not concerned about the possibility of XRP being classified as security. Ripple would be able to exist if this happens. This is because most of the payment solutions the company's customers that use XRP are currently using them for aren't in the United States, partially because of all this regulatory unclearness. Really and seriously, XRP is doing what they can, but it's on the United States to make a move. The Trump administration, the SEC and all that stuff under the administration didn't really do too much. I'm interested to see if, even if Biden's incoming administration overregulates it a little bit or a lot of it, at least there'll be regulations that can then be worked on and narrowed down based on feedback from businesses and corporations like Ripple. So, not perfect, but we'll see where the future takes us. But that does it for the trending articles in the crypto news space. Let's take a look at the top 10 cryptos by market cap. Bitcoin has dipped under $17,000, $16,895. Oof, down 2% on the day. Ethereum, which I believe was over 600 at one point, is back at 511, down 1.72% on the day. XRP is holding a little bit flat, but they made it up to almost $1 if I remember correctly. They're back down around half. Bitcoin Cash, basically everything is the red. Litecoin, the biggest loser on the day, down 8.57%. Cardano's actually holding pretty flat, even though it is down on the day. It is still up on the week, so good for them. In terms of biggest winner today, SushiSwap is up 17%, probably because of the news from Yearn Finance. Stellar's doing pretty decent, and of course Wi-Fi up 8.62% on the day as well. Not too bad. Woo. Where are we? Biggest loser, Energy Web Token down 10%. I mean, it's a pretty meh day for cryptos overall, but it's not a horrendous day, though I would like it if it picked up. But that will do it for this episode. Again, thanks to everyone who has subscribed. If you haven't and you've made it to this point, you might as well hit that button wherever it is, so that way you can stay up to date in all the trending articles in the crypto news space. My name is John, and I'll be talking to you soon. Peace.